It was a strong quarter. Start off with Capital First because a strong quarter on expected lines for Capital First. Let's get in Mr. V Vaidyanathan, who joins in to talk about the quarterly earnings, and Shraddha Babla from the research desk joins in to talk about them. Shraddha, take it away.
Thanks, Neeraj. Very good morning, Mr. Vaidyanathan. You've got a lot of time to think. It's been a good 4 months since the decision to merge IDFC Bank and Capital First. Have you started thinking deeper about the strategy for the new IDFC Bank?
Basically, what we are carrying into that institution as we put the pieces together is that our core return on equity has now crossed, is touching almost close to 15%, and the loan book has got significant scale at about 27,000 crore. So we believe at that large scale to generate a good return on equity, that too the bank platform, we expect the cost of funds to be lower by about 1%. I think that together this is a very powerful engine which is going to drive that machine. Equally at the bank level, I think they're doing a good job and posted good results. I think coming together, I think the business can grow, at least the retail business can grow at upward of 25%.
So, but with respect to the bank, what is going to be your strategy? How do you, intend to ramp up the retail franchise in this crowded market? Are there any numbers or targets with respect to branch additions, etc., that you can share?
First of all, the merger is subject to regulatory approvals, so I wouldn't want to get ahead of myself on that front. But with regard to your specific question, yes, basically, as we said before, that retail is going to be a significant portion of the entire machinery. On the wholesale side, of course, the wholesale banking as such is a good business. We are a bit concerned about project financing or infrastructure, but wholesale banking as such is a great business. There are many streams of income there. As far as the branch network is concerned, there's no doubt the branch network has to substantially expand from what it is today. So I think when these pieces fall together, combined with a growth strategy of growing at about 25% year on year, I think it will make for a good story.
Right. So you've kept telling us again and again that retail is what gives you your peace of mind. So what percentage of the combined portfolio can the infrastructure financing book shrink to over a longer 3 to 5 year period?
Well, again, with the caveat that it is subject to the regulatory approvals, I must say that, the combined retail loan book from what we understand of the two organizations put together should be close to about 30,000 crores as of March of 18. Now, if you compound that anywhere between 22 to 25% over 5 years, you can see that you can easily get to close to about 100,000 crores. So we really think that is going to be definitely an area we're going to work on.
You have ended FY18 with 27,000 crores of AUM like you had guided. Can we see a repeat of this performance in FY19 as well?
Well, first of all, this market opportunity is very, very large, but we would be comfortable guiding for a 25% growth.
Okay, but 25-30% sort of a number you've done on a, as a standalone Capital First in itself. So with the IDFC, merger and customers coming in, wouldn't you want to up that target?
Well, as I said, growing even at 25% on a compounded basis sets up an organization for very good future. So I would be comfortable guiding for 25%.
All right. So for FY18, as far as Capital First is concerned, the total income has grown by 48%, but OPEX has risen at a much faster 56%. So is this the kind of trend we could expect to see in the future as well, especially with your merger-related costs, etc.?
Well, actually, no item in any P&L should be seen in isolation because they all play with each other. So actually the way we look at it is that net of increase in expenses and income, the profits need to grow. And in our case, profits have grown at a compounded rate of 39% for the last 5 years on a CAGR basis. So I think the story of the profit numbers exceeding the growth of the loan book, we think that story should continue for a while.
All right. And by when do you see the merger becoming effective? Are you penciling in FY19 itself?
We are, basically I'd like to clarify that the application for the merger has gone from IDFC Bank side, so probably they'll have much more visibility into this. But from what we see and understand by talking to them is that the applications have been filed with the regulator Reserve Bank of India, and that is under process. And as far as Competition Commission of India approval is concerned, that has already been received. So we think this process should play out in the months to come.
Okay, so your gross NPAs have remained steady around that 1.6% mark for the last few quarters or years for that matter. How do you see them moving ahead from here onwards, and what are the kind of gross NPA numbers that you're comfortable with?
Capital First level, it's a story of close to 7 years now. Adjusted for 90 days past due, our NPS have been about 1.6 to 1.7 consistently for a very, very long period of time. And our net NPA has been close to about 1%. We don't see this in any we don't have any sort of concern on these. We believe this will be very stable because the underlying factors on the basis of which we built the institution we have very strong controls.
Okay, so despite the improving macro situation, you are saying that your gross NPAs will continue to remain around that 1.6% mark?
I would actually expect that. I would certainly expect no deterioration on this number at all because we've been stable at it. But yeah, I would expect a certain sort of improvement if nothing else.
All right, Mr. Vaidyanathan, thank you very much for speaking to BloombergQuint. So Neeraj, that was the management. 25% AUM growth is what they're guiding for. Not too much clarity yet on IDFC Bank and the strategy thereof.